Welcome back to Asia Business Tonight. Now, gold is regaining its luster amid uncertainty over the U.S. fiscal cliff. This is making it the knight in shining armor. But what risks should investors be aware of before putting their money in the yellow metal? And are there alternatives to gold that they can invest in? Let's find out in our portfolio check. My guest tonight is Samir Shah, Chief Business Officer of the Dubai Gold and Commodities Exchange. Samir, welcome to the program. Uncertainties in the fiscal cliff, economies bombing everywhere, Eurozone having problems, but everything points to good things this means for gold, right?
Absolutely. I think gold is the classic protector of uncertainty. It's protector of wealth when things go wrong. I mean, gold is the safe haven right now with so much uncertainty. Cash is the safest instrument, and gold is the next to cash. So it is the knight in shining armor right now.
So beyond the fiscal cliff, there are now fears the U.S. monetary stimulus may be withdrawn. A Federal Reserve policymaker has voiced concern about stimulus measures. But what will this mean for gold prices? Presumably, this just is more good news for you.
I think the more uncertainty there is in the world and in the financial system and in the economy, it means that people will continue to chase gold because it gives safety. And right now we don't see any answers coming out from the world. The China recovery is uncertain. It seems to be recovering, but not sure yet. The U.S. economy, not sure yet what happens to the fiscal crisis, fiscal cliff. Europe, not sure what's going to happen. Spain, not sure with Catalonia's strive for independence. So there is too much uncertainty. I think it's going to take a long time for it to wash out before certainty trends start to emerge. So gold, I think, is going to be a key investment portfolio. But
let's turn our attention now to copper. The metal hit a 3-week high earlier this week. What factors would affect the price of copper going into 2013?
I think copper mainly is driven. Copper is a leading indicator to the economy. As the economy picks up, construction activity picks up. Copper runs through every construction activity that happens. It's in your electrical cables. It's in your copper wires. So copper is a leading indicator. So when economy starts to look up, copper starts to look up. So there are signs of an early Chinese recovery. China is the largest consumer of copper. It consumes more than 40% of the world's copper, and it's just basically a factor of what happens in China. So copper is inextricably linked to the future of China at the moment.
And the future of all of us. And you mentioned that when economies are doing well, copper demand goes up.
Yes.
And then I would presume the demand for gold perhaps comes down.
Yeah, they do tend to move in opposite directions. Absolutely, they do tend to move in opposite directions. Yeah.
Okay. Is there anything else you'd like to tell us about the copper market? If investors were looking at getting interested in either copper or gold, where would you be putting your money in right now? I think one would look at, I would say that one should look at both copper and gold in your portfolio. They are good diversification opportunities given that equities is uncertain. So the products that we offer, for example, offer classic diversification opportunities for investors, and it should be a must in everyone's portfolio. It depends on how much you put there, but it should be in your portfolio. Okay, thank you very much, Samir. I've been speaking with Samir Shah from the Dubai Gold and Commodities Exchange.